Hello traders, Jonathan with Forex Flow Trading. Going to do a video here, more of an instructional type video of how to kind of handle and process the flow levels when you receive the info. Kind of a step-by-step of how in-house I'm teaching the traders here to, handle the trades. Obviously we have a lot of traders that receive the levels, and they can use them to complement their system, to add confirmation to their system. So we don't want to limit the use of the information that you're receiving. So feel free to kind of take it and use it to kind of add some probability to your trades, or help you add size if you're getting another indicator, or you've got another system that you've done for a while that you like, and use it as a complement. But for those traders who just need a plan from the start, where to enter, where to exit, how to take profit, and where to maybe set a stop if a market runs against, it can just use this, and we'll teach these simple kind of rules of how to use the flow levels. I've got the Australian dollar here. I just randomly picked this pair, and I'll be doing video series along the way. I figured the best way, instead of just coming up with a set of rules, is to maybe just walk a trade through the market using the flow levels. This one I'm going to go back a couple days, but I think that it might be even better to film live beside an example, but actually walk through a trade and manage the trade out and film that process, and that'll help traders get more familiar with how at least we in-house handle this. I'm going to go back to Thursday. Today's the 30th. I'm going to go back to the 26th, and we're going to kind of walk through the trade, the 26th and the 27th. We'll look at both of the flow levels that came out and what could be the result of that. So right here is an April. As you can see, the cursor moves when you, but down here is going to be your time stamp. So if you want to look at that when the cursor's over a candlestick, it'll tell you the date and the time. Now this is GMT time, so you have to subtract for Eastern. So right here is the 9 o'clock Eastern candle, which is 1 o'clock according to this MT4, which might not quite be GMT, but it's close to it. It's either GMT or GMT plus 1. But here's the 9 o'clock, which during this is a 1 hour candle chart. During that time frame, usually 9:30 to 10 is when the levels, you'll receive the levels for that day, and the levels are good for 24 hours, typically until unless I do an Asia update or I change the levels. We tend to look 24 hours, and we'll keep our orders on. Now the closer we get to the next day, based on some judgment, we might not take a trade if we're an hour away from new levels, and we want to wait. But that comes with experience. So the levels on this day, and you guys that have been with us, you know that these levels are what was posted that day. So we were looking at, and this is Thursday, April the 26th, we're looking at 103.77 to 103.89, and we had a cap of 103.97. Now remember, these levels came out right around this, so actually price, price was under it when it was a post. The 10 o'clock window went into the sell zone up to the top side close to that 103.89. So at this point you should be at a sell 103.77 or 103.89. Came off, but only came off to about 103.67, 68. So unless you're a scalper, not really much for us here in house, because we don't tend to scalp a whole lot. Based on the price action, if we see a rejection and then it doesn't come off at least 20 pips, we tend to at that point watch the cap. If it does come off 20 pips, we typically will move to break even. That's kind of a standard rule for us, especially after it's touched on the first, after the first touch and you get a rejection 20 pips, we'll move to break even. Now if it revisits the higher level, we may re-enter the trade again or the cap. And so here didn't come off enough to move to break even, so we're in the trade and we move up to the cap. In-house here we add at the cap. I mean, the cap is not a stop for us. The cap is the highest probability trade for us. It might not be seen, but if it does, we tend to see a very good probability that a decent intraday trade will happen off of the cap. It's kind of our safest entry. So that said, if you need a fixed stop in your trades, tend to look 10 to 12 pips away from the cap is where I would suggest a stop be on intraday trades. So if you want kind of a place to set a fixed stop, I would suggest 11-12 pips from the cap. The cap can overshoot just barely a bit. If it starts to break the cap and move, then it's not worth the risk at that point unless you're very experienced to kind of let the trade go much more against you. So we see here, as this is towards the evening of that day, Asia opens about to happen around here. So the caps the trade, and then eventually gets the 103.58, 59 I think is actually the low. So at this point we would have re-entered the cap, and so we're taking profit on the cap once we're back under the 77, and then we'll make a judgment call on the rest. We may just clear the trade if we don't like the price action, or we may leave it. We may at that point move our entries to break even, and this is where, depending on your style of trading, for us it's typical to clear the cap, profit, and move the others to break even, which would have, the original sales would have got stopped at break even on this. The lowest it really saw was 103.53 after the cap, and then the sell zone held again, which is enough to, on a fixed system, would have executed all these trades to a break even. So break even should have been the worst outcome of this trade. The best outcome is, with a little experience, trading off of the cap or taking your profit. Our sell zone held, but it's typically not what we look I mean, we want to see 40 to 70 pips on an intraday trade. This one didn't produce it for us, but it did limit our exposure. We were able to capture because we trade off the cap as well, and then the others were kind of break even. So moving to the next day. Now the challenge of this is a You know, this is London right here. So unless you have a system that executes orders automatically for you, or you have a fixed stop in place, or you adjust 24 hours, you know, you might have experienced a loss on the trade if you just set a sell and a fixed stop, and it might not have hit your target. So that being said, that's why you want to know where you need to put a stop. If you're that trader who just wants to set an order, forget about it, it's going to hit your stop loss or it's going to hit your take profit. And these levels are great for that. You can make a lot more money if you're actually an active trader, but you know, if you're not, over time your win percentage on your targets and your stops, you're going to make consistent money by just setting orders. So let's move to the next day. We saw a move really out of London on Friday, kind of pushed the odd up. So here we are